What if I told you that the biggest reason you're not making money in trading isn't your strategy? It isn't your indicator. It isn't your mentor. It isn't even the market. It's something you've carried with you since long before you ever opened your first chart. And the worst part? Most traders spend years trying to fix everything except this one thing. They buy another course. They search for another strategy. They download another indicator. They change brokers. They switch time frames. They convince themselves that the next system will finally be the one. But the real problem quietly follows them everywhere they go. Because you can change your strategy. You can change your trading style. You can even change your market. But if you don't deal with what's happening inside your own mind, you'll eventually find yourself making the exact same mistakes all over again. That's why some traders can take an average strategy and stay consistently profitable, while others lose money using strategies that have already proven to work. The difference isn't intelligence. It isn't experience. It isn't luck. It's how they respond when money is on the line. Today, I want to introduce you to the real opponent every trader faces. Not the banks. Not the algorithms. Not market makers. Not liquidity. Not volatility. I'm talking about an enemy that sits quietly beside you every single time you open your charts. An enemy that whispers instead of shouts. One that doesn't look dangerous. In fact, it often sounds reasonable. It tells you it's just trying to keep you safe. It tells you to be careful, to wait a little longer, to protect your money, to avoid another painful loss. And because those thoughts sound logical, you listen. Without realizing it, you've handed over every important trading decision to the one thing that's guaranteed to keep you stuck. That enemy is fear. And today, we're going to expose it completely. Because once you understand how fear really operates, you'll start seeing it everywhere. You'll notice it before every trade, during every trade, after every trade, and more importantly, you'll finally understand why it has been costing you far more money than any losing position ever could. So if you've ever hesitated to enter, closed winners too early, moved your stop loss out of panic, skipped trades that later became massive winners, or found yourself staring at the chart wondering why you keep repeating the same mistakes, stay with me. Because by the end of this video, you might realize you've never actually been fighting the market. You've been fighting yourself. The lie every new trader believes. Almost every trader begins the journey with the same belief. If I can just find the right strategy, everything will fall into place. It sounds completely reasonable. After all, that's how we're taught to solve problems. If your phone isn't working, you replace it. If your car breaks down, you fix the engine. If your internet is slow, you upgrade the connection. So naturally, when trading doesn't work, your brain assumes the strategy must be the problem. And that's exactly what most people spend years chasing. One strategy after another. One indicator after another. One YouTube video after another. One paid course after another. For a while, it feels productive. You're learning. You're taking notes. You're testing ideas. You're convinced that success is just one discovery away. But something strange keeps happening. Every new strategy works beautifully during backtesting. It makes perfect sense while you're watching someone else explain it. You can even recognize high-quality setups after they've already happened. Yet the moment real money enters the picture, everything changes. Suddenly your hands hesitate over the mouse. Your breathing changes. Your heart beats faster. Simple decisions become difficult. Rules you've memorized disappear from your mind. And the strategy that looked so easy yesterday suddenly feels impossible to execute. What changed? The charts didn't change. The market didn't suddenly become unfair. The strategy didn't stop working overnight. The only thing that changed was the presence of risk. The moment your money became vulnerable, your brain stopped thinking like a trader and started thinking like a survivor. That's because your brain has one primary job: not to make you wealthy, not to make you profitable, not to help you pass a prop firm challenge. Its number one priority is to keep you alive. For thousands of years, that survival system protected human beings from predators, dangerous environments, and life-threatening situations. The problem is, your brain doesn't always know the difference between physical danger and financial uncertainty. To your subconscious, watching your account fluctuate can trigger the same alarm system designed to protect you from genuine threats. It doesn't understand probabilities. It doesn't understand positive expectancy. It doesn't understand that a perfectly executed trade can still lose. All it knows is this: Something valuable might disappear. And the moment that thought appears, fear takes control. This is why trading is unlike almost any other profession. A surgeon doesn't have to decide whether to perform an operation while his income changes every second. An architect doesn't watch money appear and disappear with every small decision. A teacher isn't forced to accept uncertainty every few minutes. But as a trader, uncertainty isn't an occasional visitor. It's your full-time business partner. Every position you take begins with one uncomfortable truth. You don't know what will happen next. You can analyze. You can prepare. You can stack probabilities in your favor. But certainty? That never comes. And that's exactly where fear begins to grow. Because fear loves uncertainty. It feeds on the unknown. It whispers questions that have no immediate answers. What if this trade loses? What if this is another fake move? What if you're wrong again? What if you lose everything you've worked for? Notice something about those questions. None of them are facts. They're possibilities. But your brain reacts to possibilities as though they've already become reality. And that's the trap. The market doesn't have to defeat you. Fear only has to convince you that something bad might happen. Once it does, you'll often make the wrong decision all by yourself. When fear wears a mask. Now here's where things become dangerous. If fear showed up looking like a villain, you'd recognize it immediately. If it walked into your trading room wearing a sign that said, "I'm about to sabotage your next trade," you'd ignore it. But that's not how fear works. Fear is much smarter than that. It doesn't knock on your door announcing itself. It wears a disguise. It borrows the language of wisdom. It dresses itself up as caution, as responsibility, as patience, as discipline. And because those are all qualities that good traders are supposed to have, you welcome fear without realizing it. That's what makes it so difficult to identify. The market isn't your biggest magician. Your own mind is. It can make fear look exactly like good judgment. And unless you know the difference, you'll spend years congratulating yourself for decisions that are quietly costing you money. Let me explain. Imagine you've spent the entire morning analyzing the charts. You marked your levels. You've identified the trend. You've waited patiently for price to reach your area of interest. Everything on your checklist lines up exactly as your trading plan requires. This is the setup you've been waiting for. Then, just before it's time to click the buy or sell button, a thought appears. Maybe I should wait for a little more confirmation. That sounds responsible, doesn't it? After all, waiting for confirmation is part of good trading. So you wait. A few candles pass. Price starts moving. But now another thought appears. Let's just see one more reaction. You wait again. The market keeps moving. Another excuse arrives. Maybe the market will pull back first. Before long, the opportunity is gone. Price reaches the exact target your original analysis predicted. And you're left staring at the screen thinking, "I knew it," but you never acted. Was that discipline? No. It was fear hiding behind the word confirmation. That's one of the hardest lessons every trader has to learn. There comes a point where waiting isn't increasing your probability anymore. It's simply delaying your decision because you're uncomfortable accepting uncertainty. And uncertainty is something you'll never eliminate. Not in trading. Not ever. The difference between patience and hesitation. This is where many traders get confused. Patience is waiting because your plan hasn't been fulfilled. Hesitation is waiting because you're afraid to trust your plan. Those two behaviors can look identical from the outside. Both involve waiting. Both involve doing nothing. But internally, they're completely different. One is driven by rules. The other is driven by emotion. Professional traders understand this distinction. They aren't patient because they're scared. They're patient because they know exactly what they're waiting for. And the moment their conditions are met, they execute. Not because they know they'll win, but because that's what their process demands. That's confidence. Confidence isn't believing every trade will make money. Confidence is believing you will follow your plan regardless of what happens next. When playing it safe becomes expensive, let's talk about another phrase traders love. "I'm just playing it safe." Sounds smart. Sounds mature. Sounds like something a responsible trader would say. But here's the question very few people ask. Safe from what? A losing trade? Because if that's the answer, you've already misunderstood what trading is. Trading isn't designed to eliminate losses. It's designed to produce profits over a large sample of trades. Losses aren't evidence that something went wrong. They're one of the costs of participating in a probabilistic business. Think about a casino. Every single day, casinos watch people walk away with money. Some players win thousands, sometimes even millions. Does the casino panic? Does it shut down because someone won? Of course not. Why? Because the casino isn't focused on one outcome. It's focused on the long-term mathematical edge. Now compare that mindset to how many traders behave. One losing trade, and suddenly they question everything. The strategy, the market, the session, the mentor, even themselves. One loss becomes proof that something must be broken. But imagine if a casino operated that way. They'd be bankrupt within a week. Professional traders think more like statisticians than fortune tellers. They understand that individual outcomes don't define the quality of a system. Consistency comes from repeatedly executing an edge, not from demanding that every trade be a winner. Fear doesn't want you to win. It wants you to feel safe. This is one of the biggest mindset shifts you'll ever make. Fear has no interest in helping you become profitable. Its only objective is to reduce discomfort. Those are two completely different goals. Sometimes they're even opposites, because the actions that create long-term success often feel uncomfortable in the short term. Holding a winning trade, according to your plan, feels uncomfortable. Accepting a stop loss feels uncomfortable. Entering a high-quality setup after 2 losses feels uncomfortable. Following your rules when every emotion tells you to do something else feels uncomfortable. Fear doesn't care whether those actions are correct. It only cares that they're uncomfortable. So it offers you an escape. Close the trade early. Skip this setup. Move your stop loss. Reduce your position. Wait another candle. Ask someone else for their opinion. Do anything, as long as you don't have to sit with uncertainty. The relief you feel after making one of those decisions is immediate. That's why fear is so persuasive. It rewards you with temporary emotional comfort. But here's the catch. Temporary comfort often creates permanent frustration. Because later, when you see the trade hit your original target, or realize you skipped the textbook setup, you don't just lose money. You lose trust in yourself. And once self-trust starts to disappear, every future decision becomes even harder. That's how fear compounds. Not just financially, psychologically. The most dangerous habit nobody talks about. There's another way fear quietly slips into your trading routine, and it looks incredibly productive. You become obsessed with gathering information. You watch more videos, read more books, join more communities, download more indicators, test another strategy, then another, and another. You tell yourself you're preparing. But if you're honest, deep down, you're avoiding responsibility. Because every new piece of information delays the moment when you have to rely on your own judgment. Learning is important. Education matters. But there comes a point where more information stops making you a better trader. It simply becomes another hiding place. At some stage, trading stops being an information problem. It becomes an execution problem. You don't need 10 more strategies. You need the courage to consistently execute the one you've already tested. That's where real growth begins. Now, everything we've talked about so far happens before or during a decision. But fear has another side that catches almost every trader off guard. It doesn't just influence the trades you take. It changes the way you remember your losses, interpret your wins, and approach your next opportunity. And once that cycle begins, fear starts feeding itself. Let's talk about that in the next video to break it down further. Thank you for watching. Bye for now.